Because at the bottom line is the results. What do I need to do every day to make money in this game? What am I looking for? What exactly causes me to pull that trigger? That's exactly what we're talking about in this video, because all the other stuff is fluff. All the other stuff is just fugazi, wizzy, wuzzy, big word terminology, this, that, and the third, and that's all cool because it's important to really define what's how everything works, etc. But what is it? Am I actually looking for when I see it? Boom! There's no question. There's nothing else that I'm looking for. All I got to do is see this, and I pull the trigger, right? And when you get really clear on what you're looking for, everything else is less attractive. That's what's important. Right? It's like when the vision is strong, right? When the vision is there, I want to become good. I want to make money in this game. Like when it gets very clear like that, now you got to go, all right, how do I attain that vision? How do I make money in this game? What do I need to do? Right? And then once you clarify what it is you're looking for, whether it's the HPT cross, whether it's the area of value, whether it's the 2-minute 20, right? We got these tools. So I'm not doing anything else. It would be absolutely ridiculous to do anything else, bro. So that's what I want to talk about in this video. I think that's the most important thing, is the bottom line. What do I need to see to actually pull the trigger and make money, right? So give me a minute here. Let me pull up, what is it here, so we could just break down Columbus Day. Which was 10/13. 10/13. Here we go. Boom, boom, boom. Okay. All right. So Columbus Day opens up. Market opens up. My first trade was actually a loss here, and I want to talk about it. I jumped into the market quickly here. Okay. And once again, though, I was proud of why I got in. All right. So if I pull up, I'm gonna do this with a 5-minute and a 2-minute side by side, because that is how I've been trading lately. We identify the clear market conditions off the 5-minute, and then we drop down to the 2, and we pull triggers, okay? So, once again, the primary purpose is, Josh, I want to make money next week. What do I need to do that, okay? Well, number 1, you trade off your critical level, all right? Open print is the level that I'm always watching, okay? Open print. Open print's right there. Bam. Then I'm looking for... It doesn't need to be a moving average cross, but moving average crosses are very nice. They help me understand which way the market's usually headed, okay? Is it going up? Is it going down, right? It's one of those tools that we use to filter out the noise in our mind, okay? Like when we're looking at the market looks like this, okay? We got all these other factors, right? We got all that noise going on. Is it going to go up? Is it going to go down? What do I need to see? This, that, and the third, right? I'm looking at this. We're super far right here. We got end of day down here. So we've gapped up. All right. EOD is all the way down here. Previous day high is all the way up here. So we gapped up in pre-market. We get a moving average cross off the open. And the 930 candle right here is a GBI. Okay. So that fits all my criteria. Once I see that, I drop straight down to the 2-minute time frame. And I identify a candle respecting the 20 EMA. All right, this is the most important part. If I'm getting a candle respecting the 20, I'm getting in the trade. There's nothing else that I'm looking for or trying to do, right? So I get into the trade super quick as soon as the candle closes respecting the 20, and then I get stopped out of my trade. Okay, you know what the most beautiful part about all this is? When I'm getting stopped out of my trade to the downside, what does that tell me? That's telling me that I'm the trap seller, right? This whole strategy is based off identifying the trapped enemy. I call it the enemy, right? Like if the buyers are trapped, I want to sell. If the sellers are trapped, I want to buy, okay? So I get into the market short, I get stopped out of my trade on this candle, this large green candle. It very easily was I able to understand that the market was not going in my favor, right? And that's important. We got to be able to get out of our trades when we need to. Market rallies up. We get another bounce right off the 20 that facilitated the long play to the upside, right? And this is why we love trading off open print, okay? Because like, check this out. We get that red bar that we got in short on, got ignored, it got disrespected. We draw the area of value, okay? This is our little area of value. Now, once price comes into the 20, respects the 20, this is now our long play, and our stop loss goes right below that candle, all right? And other than that, this day was pretty garbage. There was low volume. It's like kind of a holiday. It's a bank holiday, so certain things don't clear. But I want to talk about that trade and then this trade as well, okay? So then this was my next trade. If I pull up over here, you'll see, once again, what's the strategy? What's the approach? Josh, what do I need to look for come Monday to make money? And not just make money, because trading, yes, one of our jobs, obviously, is to make money. But it's to manage money, okay? And what managing money means is I don't take horrible setups. I don't participate in the market when it's not fruitful or it's not healthy or it's not giving good opportunity. We need to understand that until our edge shows up, the participation needs to be non-existent. Until I get the RBI or the GBI, there's really no reason for me to participate, right? And that includes quick scalps. Right? Like there's that fine line there where we like to scalp really quick just to make a little money. But that's a fine line. You got to be careful because it's very easy to defer from the strategy that's actually working. Right? So we get that red bar. It's ignored. Bam. Box goes around it. Here's our box. Okay? Dude, it's so crazy. This is my one-way to trade. I don't enter right here. I don't participate in the market here. I participate when price comes back to that 20. And that's when I get into the market, right? It's like once price comes back up to that 20 and it can't close, it's just such a beautiful thing right there. I've literally been doing this over and over, very strong for the last month, and it's helped me so much with not obviously making money, but with avoiding bad setups, bro. It's so phenomenal. That Monday, bam. Yeah, Monday was kind of, there really wasn't much there. Let's dive into Tuesday. Tuesday was a phenomenal day on the market. It was an absolute phenomenal day on the market. And what I really loved about Tuesday was the fact that the strategy just presented itself flawlessly, right? We got that beautiful right there. Let me just highlight that. Red bar gets ignored off the open, okay? Once again, there's no there's no GBI on the way down. So there's no trade for me, right? There is an RBI on the way up, right? That would have been a great setup, okay? That would have been a phenomenal long play up into the highs. I didn't take it because we did not touch the 20, okay? So if I highlight the 2 minute here, we got no play here off the 20. Now, could I have taken that long? Absolutely. And there would have been nothing wrong with that, right? But now, it's like, once again, we need to become okay with not getting in every trade. Like, how many times do we make money, lose money? And we lose tons of money. And then we make money, lose tons of money. We got to ask ourselves, when we're in that pattern, are we trying to take every single trade we see? Like, and not just like, and what I mean is like, am I trying to force setups or defer from what works? If I'm not getting to play off the 20, I'm just not trading, right? It's really that simple for me. The trade I ended up taking right here, because I'm done playing games, bro. Like, I'm done playing games. I'm trying to make $250,000 a year trading, and if I'm gonna do that, I can't be playing games, right? Like, I've come to that realization. I'm just done playing games. Like, I'm not deferring from the strategy. I'm just gonna wait, and when I get that RBI or GBI, I'm gonna highlight the area of value, and I'm gonna play off the 20. Like, this was this play right here was so clutch, man. And once again, following that same system, where if I come into the 20 and I can't close below it, I'm entering into it, and I'm gonna target the upside target. right? Which right here was this guy. So once again, previous day open print became our upside target. Price came, created the area of value. Notice when the area of value, and I've seen this a lot. Well, once you get the RBI, watch how it holds the 9, right? Look how far away we are from the 20. These are vulnerable entries at times, okay? Because especially if you're trading futures, you can't account for this drawdown. This is going to wipe you out. This is going to cost you $700-800 per contract, especially in this volatility. So we've really tuned the strategy to now I'm only trading off the 20 because if I'm getting in right here, right, candle closes, respects the 20, my stop loss is going to go here. So now I'm only risking about 30 cents right here to see if my trade works for me. And sometimes I get even better entries than that. Really good play off the 20 right there. Bam! That's the blueprint. This is the blueprint. This is the blueprint that we must follow every single day. I don't care if I'm coming into an area of supply. I don't care if it's resistance, right? If the 20 is getting respected in a box in the area of value, I'm pulling the trigger, right? It's like, and then once I understand the story, I could then find other trades later in the day, right? Like once the story's understood, oh, this was this day. And then, all right, so I took that trade, and then check this out. I actually caught this short play right here at the end of the day. Todd, this trade was insane. It was insane. And it was kind of like I just threw a dart. So when you trade SPX 0-day contracts, you can buy contracts right here for like $50, and they go up to $3,000. It's the most insane thing in the world. But you have to be correct, right? So basically how this day worked is over here on SPY, we were battling previous day high, right? So I'll just label this right here. This green line was previous day high, right? Notice here how we're coming into it. We can't get above it. It's this massive battle here up at previous day high, right? And it's like we're trying to get above it. The 20's getting respected here on the 5-minute, but we can't find any acceptance here. So I actually took a long play. I was looking to play above it. And we couldn't get acceptance. It couldn't go further. I stomp out of my long play on this candle. Once again, why did I stomp out of the long play? Because the 20 was disrespected. Like this is why, in my opinion, moving averages are maybe the most effective tool I can use as a day trader. Because if I'm getting into a trade off the moving average, I'm also getting out of the trade once the moving average isn't respected. Right? Like it's a very clear way to go, okay, I want to get in and I want to get out. Right? Like, and it keeps us grounded. Present moment. What's the market telling me? I'm battling previous day high right here. I'm looking for a breakout above it. Right? But how do I know we're not going to get it? When I spot that weakness, right? This right here is weakness. We're no longer respecting the 20 like we did right here. All right, I'm going to get out of the market. And then what do we get right here? A green bar that's ignored. I hop in short and capture this massive short play here where I made $700. I bought a contract for like $60 and ended up selling it for almost or over $800 just on this short play. Like, and that's just the power of them SPX contracts, 0-day. Like, you can do things like that. And our strategy allows you to, because you can spot the opportunity.
Beautiful play. If I could point something out here, Josh.
Yeah.
That candle, look to the left. Look how much it blew out.
Yes.
Right there. All that time and price right there.
Yes. This guy, right? The one you're talking about.
Mm-hmm.
Bro.
Yeah, 332 candle or something.
Yeah.
330. Yeah. Look to the left.
Bam. All this.
Yeah, so anybody buying anywhere in that last hour before that, where you think their stop just got hit?
Ready?
You know?
Ready? This is the $1 million word. Trapped. Our strategy, our whole philosophy is based off this word. Trapped. Right? Because think about it. I say it in every one of my YouTube videos, we can't move price, right? And we got to once again, let's take a step back and just look at the context of the game we play. We make money as price moves in our intended direction, right? So we look at a chart and go, okay, if it's going down, I want to trade it down, and I make money if I do that. Okay. Now, since we can't control price, right? No matter how much analysis we know or have, like we have no influence over how this game works. We just only influence ourselves, right? So, how do I determine which way the market's going to go? By identifying trapped buyers or sellers. So what Todd's saying right here, which is so simple yet so genius, we have this critical level, right? This is previous day high. And every time price comes into it, we literally get, what is this? Oh, wrong one. We get a rejection. Rejection, right? Look at this red candle. Boom, rejection. Red candle. Boom, rejection. Price comes back up. We get a little bit of rejection. We get an RBI right here, which is what caused me to go long, right? I was like, oh, bro, red bar, ignored. I'm going long. But look at the 2 minute. I should have never went long there, right? Because if you look at the 2 minute, is the 20 being respected? Yeah, but the cloud ain't green, right? So, I mean, that's questionable. I understand. No, I went long right on this candle. Look, so I went long on this candle. The 20 is not being respected. Yes, there's an RBI, but the 20 is not being touched. It's not being respected. So this was a loss. I was a trapped buyer. Okay? So once again, this red candle that Todd just pointed out wiped all these buyers here just got smoked. This last 2 hours of buyers just got trapped, and now I'm able to stomp out of my position. Other people need to stomp out at specific levels. So they start to stomp out here, and then the big stomp out came right here. Okay? That's where we got that green bar ignored. I bought a contract for $70 and ended up selling it for over $800 right here. Think about that. I'm risking $70 right, and I sold it too early. Well, let me rephrase. I sold it right here, right? But the thing is I market ordered it, right? So when these contracts are ripping think about how much a contract has to fluctuate every second to go from $70 to $2,000, right? It's like 70, 270, 320, back down to 220. You know what I'm saying? It's like, then it jumps up to 800, right? And it's like, okay, and then it jumps up to 1500. I go to sell it at 1500 and my fill's at 850, right? Because these contracts start fluctuating so much because it's 20 minutes before the end of day, right? And there's 0 day contracts, right? That was an insane play. That's a little trick that I do on SPX that literally that one play made up for 4 losses, right? So beautiful trade. Wednesday was my best day all year, actually. I as far as on my cash account, $2,100 on one SPX contract, over almost 200% return on this trade. And I just, once again, in the beginning of this webinar, I said there's no reason to really trade any other way. And it's because of days like this, I can say that and actually believe it. So the market opens up here on Wednesday morning, and let me get it here on the 2 minute, where we at? Okay, right here. Market opens up. Now, once again, my strategy is very simple. I'm looking for an RBI or a GBI on the 5 minute time frame, okay? And then I'm looking for a 2 minute 20 retest. That's all I'm looking for every day. Everything else is noise and may work, but isn't working as effective as this. And I found if I don't get it, there's really no point for me to trade, because then I'm just getting lucky, right? Look at this price action. No RBI, no GBI. I'm looking at this and it's blue balling me, right? There's tons of price action right here. I'm making no money right here, but I'm okay. Price comes up to this critical level and we start to reject. Cool. Now, we get a green bar right here that's ignored. And then if you look over here at the 2 minute, the 20 starts to be respected. I wanted to short right there. I should have shorted right there, but it's not a big deal, right? I'm like, yeah, I missed it. I didn't take it. I was just really focused on my cash account. If I was trading my futures account, I probably would have took that short. Just because on futures you could get right back into trades very quickly, right? If it goes against me. But I just want to point out, guys, look at this. Green bar, ignored, 20 gets retested. I mean, this is so damn beautiful. Look at this. Look, like it comes up, we get this like false breakout and then this rejection. The GBI is created, okay? Price comes up to the 20, didn't quite tag it, but still get, oh, that's why I didn't take it, because it didn't quite hit it, right? It got away from me. Okay, cool. Then we get, this is right here. This is where I got into this market short. We get this green bar that gets ignored. Okay? Now, what did I just say? I said the 20 didn't get respected. I got into the market short right here. Okay? And I want to explain to you why. We get the moving average cross. The green bar is ignored. So every time I get a GBI or an RBI, my mind goes to, Josh, how do you know the follow through is there? Where's the acceptance? Okay? I was looking for the 20 respect. I'm driving in my car. I'm coming back home from the gym, right? Which kind of sucked, right? But, you know, if opportunity's there, I'm not just going to miss it. And then price comes up to the 20, misses it. But if the main thing I was looking at was this candle right here. You guys see this candle? Couldn't break the high. So the bearish structure is still intact. We got our moving average cross. And then right here, ready? This is our box, which is the area of value. We come up, go for the 20, we miss it, but that's still telling me what? Sellers are strong, right? We get a GBI on the 2-minute, and then this candle right here was my entry. Once it closed, okay? We're closing outside the RBI and the GBI. We just rejected this super important level. This right here is beautiful entry criteria. This is the area of value was just offended by sellers. Like I got this note on my desk. It says, if the area of value is respected, trade with it, right? Like by all means, if the AOV gets respected, I'm getting in it. And then this thing just started to dump. This trade was just a straight smoke show. It just literally, look at this, drops like $5 to the downside. And the 2-minute guided me the whole way. I got out of the trade right here. Once again, using my one tool where once I enter into a trade short, right? So I'm short right here. I just keep my stop above the previous candle. Stop goes here. Stop goes here. Stop goes here. Right? Stop goes there. Stop goes here. 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 Crack. Out. It's the most easy and effective way, in my opinion, to hold on to trades. That trade was crazy. That trade was crazy.
That's beautiful.
Mm-hmm.
And I took another short too, at 12:46 for time.
Oh, bro, yeah, this guy right here, the retest. Look at this one. You said 46 right here? Hold on.
6.
Oh, yeah, look at this. Okay, all right. Break this one down, T.
And like I said, I took 2-minute EMA and a 20.
Yeah.
If we're in a down, I like for the 9 across the 20. The HPG was basically the same thing, but the candle, same thing. Look to the left.
Yeah.
Look at what it takes out. So any buyers that was buying that,
bam,
they're about trapped.
Oh,
just like you
look
said.
at that. Look at that, Todd. That's perfect. Look at that. Trapped. Look at that, bro. All right, so Todd's saying he's going short right here, right? Now, I like this because what this is telling us here, and you know what's crazy? If you pull, I know you use that 5-minute right next to you too. Look at what you're getting here on the 5. Right here on the 5, you got a GBI. Bam, baby. Like, and now ready, look at this. What's this? A perfect retest of the 20 on the 5 minute. Like, bro, I'm stealing this right from you. The moving averages don't always get respected, but when they do, you should definitely be trading with them. Like, that's the most, bro. That when you drop that gem, I'll never forget it. Because we like to complicate things. We like to be like, oh yeah, it's got to work all the time for me to use it, right? Like we like to go really full port retard and go, oh, but it works sometimes. Guys, if it's working, if it's not working, it's for a reason. It means the market is choppy and unhealthy and unfruitful, and you should not participate. If it is working, it's because the market's healthy, fruitful, and you should participate. Like that little paradigm shift that I was like, oh my, that makes a lot of sense. Like, so when I see, go ahead.
Can you repeat? Can you and Ty repeat what you just said?
So ready?
What I was just talking about.
Ready? When
I'm ready.
Moving averages don't always get respected, but when they do, you should definitely be trading with them, right? Like, as a trader, we really like everything to be perfect. I use the 50 because it always works, or the 9's the best. The best moving average is the 9. There is no best. There's what's working currently in your ability to act on it, right? Like, obviously, I use the 5, the 20. I like the 50, but these just seem to work best for me. But what makes the moving average valuable to us as traders is the fact that we get results using them. So when they're being respected, like this right here, the 5 minute, it's respecting it perfectly. So I'm going to go, okay, this information, when I look at this, I now know sellers are in control. I can't just enter into the market because this is a very large stop, right? I can't accommodate that. So we wait for the GBI, and then what Todd's saying is he's going, I'm looking for trap buyers, right? We got all this buying here. Look at all these candles. They're trying here, trying here, trying here. And then he's watching the 2 minute, and when he sees this candle right here just wipe out, it's pretty much wiping out this zone, right? We got this is support that's building, right? We got buyers trying hard here, trying hard here, and then this candle, this guy right here just completely disrespects him. So Todd's using this candle to be like, okay, how do I know the market's going to continue in this direction? Because these guys here that were literally supporting the market, trying to push it up, they just got smoked. And I know that because the 20 was respected right here, and that this candle just wiped all this out to the left of it. Bam. And that's why, and I know Todd will agree, like, when it comes to getting results in this game, right? Like, we gotta have, literally, when we need to be able to look at this chart, right? And I'll just go back to Todd's trade as an example here, this short play he took. This is all the information he needed to capitalize on this trade. And what he's doing is he's using his 5 minute, and he's going, all right, moving average being respected. We're in a downtrend, okay? I'm pretty confident the market's going to continue down. But Todd's more worried about his risk than his direction, right? Like, as a profitable day trader, you got to be, right? You can't, like, yeah, we can know the market's going down, but we can't just hop in balls deep because we get pullbacks. We get, like, the market wants traders like that because it chews them alive, right? So basically, as price comes into this level, it's in the downtrend, hits that 20, perfect, and then drops down, breaks this support. Todd's like, all right, I'm willing to participate here. I'm gonna put my stop right there, and then the trade just continues down and just really sinks. Great trade, bro. Look at that. Look at that dump, bro. That sell-off was insane. It's like a
it was nice. I see those, and I said I gotta take it. But I want you to think about look at the risk on the trade.
Yeah.
I mean, look at the risk to reward.
Yeah. No, serious.
Minute.
You know what? You know what's